All right, guys, welcome to this super quick tutorial on how to use the calculator. We're going to assume that it is the absolutely first time that you're taking a look at this calculator and that you haven't even saved it to your computer, to your own drive. So we're going to start here at the top left where it says File, and then we're going to click where it says Make a Copy. You're going to name this whatever you want within your computer. Here at our office, we name it the all-in-one calculator 2.0 team use. That's how the team knows that this is the one that they are using. So we're going to go ahead and click on make a copy. Now, if you're the admin at your office, remember you're making a copy with formulas. So if you touch around in the spreadsheet, you will mess up the formulas. So what I do at my team is I click on share. And if you notice, I am the only owner, okay? Now, I do give access to my team like this, but I do only let them do as a viewer, sometimes as a commenter, so they can give me updates on it. But I do not let them click on editor and have them edit this. Again, nobody gets to edit this. The only thing that happens here is everybody comes, clicks file, make a copy, and makes their own. So typically in our office, we click make a copy, and then the name of the new file is whatever address we're underwriting, and that's how we stay organized, okay? Now, if you want to take a recap of this same exact video, this is the one that's going to get used. You're going to see right here on how to use in English. And this video is going to be copied in there so you can take a refresh on how to use this. If you speak Spanish, the video is right here for you, okay? Now, starting at the very top left where it says address, we're going to click on the address and we are just going to put a random address. Okay, and then from there, one of the first things that you're going to notice is if you click on maps and you click on the link that it provides there, it takes you to that property. And if you go back to the spreadsheet and you click on Zillow, it's actually going to take you directly to that Zillow property, which is amazing because you can get this estimate. So this is just a really random property that I chose, but we're going to go with it, okay? So we're going to go back to the calculator. We're going to put, we don't have to put the owner's name. That's just for internal purposes. Exit strategy is for internal purposes. An agent name is internal purposes, the person that is doing this underwriting, okay? In the future, this is going to be used for the letter of intent that we are currently generating, okay? Beds, bath, and square feet. We're going to grab from here. So it looks like this is a 3-bedroom, 2-bathroom. So 3-bedroom, 2-bathroom. And it is 1,232 square feet. 1,232 square feet. Now, when I click enter, you're going to notice that the price per square feet on the rehab is going to automate automatically based off of these standard numbers that we have that you can change, okay? But I just want you guys to pay attention that the square feet of the house is used across the formulas in the calculator. So let's say that we're going to do a cash offer or that we are a wholesaler, okay? This section right here that I have highlighted in blue is the section that we're going to use. So asking price is what the seller is asking for. So I'm just going to go back and let's say that this guy is asking $250 for his house. Okay, I'm going to make this one an easy assignment fee. Let's say that that $291 is currently the ARV. I'm just grabbing that ARV off of Zillow. But again, this is all just so you guys know how to use the calculator. It's not exactly how to underwrite a property. Okay, now I'm going to assume based off of my assumptions here that it's going to need, let's say, it looks like a pretty clean property. So I'm going to assume that it's $15 a square foot. So I'm going to assume that it's about $19,000 to repair that. Now, whatever is blue, please do not edit. Those are formulas. Whatever is in white, you can edit. So if you know that this property might need only about $5 a square foot, you can always put $5 here. And then you're going to notice that the formula changes based off of the square feet. So just for the heck of it, let's go with that number since that's where we're at. Now, in our company, we normally start with a $40,000 assignment fee. But here you can use whatever is standard for your company. I know $20,000 is pretty standard out there. So we're just going to go ahead and use $20,000 for this example. Credit to buyer, this is if you're giving any credit to your buyer, so you can put that there. ARV multiplied by 80%. So typically in Florida, this is different based on any market. It's 70 to 75%. So we're going to go down to 70% of ARV. And you realize that my number down here changes because that is part of the formula that's down here. So the very next number after that is, you notice that it's 61% and that it's blue. So that's calculating a formula based on your offer. What percent of ARV is your offer, taking into account repairs and taking into account your assignment fee. So if we put both of these at 0, you'll notice that they're both at 70% because there's nothing getting added to that. But if we take it back, our actual offer is 61% of ARV. And this number is going based off of this first number right here, which is our max allowable offer, okay? Now, in between that number and our max allowable offer, you see right here, and that's pretty self-explanatory, difference from asking price and MAO. So MAO, again, is max allowable offer, and then it's taken into account their asking price up here. So you'll notice that we're $72,500 apart from what they're asking and what I can pay for this house. So in our company, we've also added these two down here, which is just to give us a little bit of negotiation room. Typically, we'd like to start with the bottom one and then make our way up if we have to. And again, these are just within our office. Now, if you want to change these, which I don't really recommend, you can double click on the actual formula, and then you'll notice the times 85% right here. Just put that to whatever number you want, and then you can use that for your company however you would like. So that right here is how you use the wholesale portion. Okay, so now we're going to keep going down here to where it says acquisitions cost. This is once you actually acquire the property, what does that look like? So you're going to notice that repairs is grabbing from up here where we put $6,200, but our purchase price, let's say we ended up negotiating and I paid over my max allowable offer. So let's say that I paid $200,000 for this house. Okay, you're going to notice that the percent of down payment right here gets populated. That's just to kind of think of it quick, what 5% is, 10% is, 20% is, and be able to put that number here where it says down payment. But making our way down is additional cash to sellers if you're going to give any cash to the seller. Additionally, arrears, if you're making up for any late payments that this person may have on their current mortgage or anything like that, maybe any liens. Well, we have a place for liens, but commissions or assignments. So if you are a wholesaler, this is where you are putting your assignment fee. If you are buying it on the MLS, this is where you are putting your agent's commission, how much money they are making here. Again, closing costs, we have generated 2%. If you're going to change that within your business, just double click on where right here you see the 4,000, and you notice that we have times 0.2%. Just go ahead and put whatever closing costs you put there. If it's 1.5%, just put times 1.5%, and you'll get your 1.5% closing cost. But we're going to assume that it's still for us are 2%. Liens here, evictions, wholesale marketing, or whatever other entry cost you may have to this house. So let's say in our case, we have this $20,000 assignment fee here. We're going to put our $20,000 assignment fee here. Now we're going to assume that this person has to go and get a regular conventional loan, just for again the use of this calculator, and they have to pay 20% down. So I see here that 20% down is $40,000. And then extra cash needed, this is where I'm going to put my assignment fee. This is where I'm going to put the closing costs, and this is where I'm going to put their rehab. So I want to put every single thing that they have all in. You're going to get this $24,000, which is just these two things added up. And then you're going to add your repairs. So taking a look at those two things, it looks like it's $30,200. So we're going to put that right here, $30,200. Okay. Now, right here at the bottom, it tells you how much is still left of that loan. It looks like $160,000 is left. So we're going to go up here to loan one, and we're going to put $160,000 at, let's say, a regular typical percent nowadays is 7.5%, 30 years, 12 payments per year. Let's say that he's going to start on the 1st of next month, and he doesn't have any balloons. Let's say that they're charging him 4 points, and he has $2,000 in fees. Okay, now you're going to notice that you have to click this button right here. And the reason that it didn't zero out is because of the points and the fees. So I would have to add that right here under extra cash needed. And I just wanted you guys to see that. But for the purpose of this, to not do extra math in front of you guys, I'm going to zero those out. And then you notice that right here, this number needs to be zeroed out, okay? That means that you have taken into account every single thing that this house is going to cost you, including your assignment fee, including your realtors, including any, again, arrears, anything that has to do with up here. This is all what we consider an entry cost, your cost to get into the property, okay? Now, just to keep, again, this video kind of basic and go through the whole thing once, we're going to go over into, actually, just to show you guys, you're going to notice that you have here loan 2, loan 3, and sub 2 loan right here. I'll show you guys an example of that later. But for now, we're going to see if this one property right here would cash flow. I'm going to go back to Zillow, see if I can kind of get the rents estimate right here, $1,967. So I'm just going to come back and put that right here, $1,967. I would go back and check what the taxes and insurance are. For this case right here, I'm just going to assume that it is $3,000 a year and the insurance is $1,200 a year. And you can see right here what the yearly cost of all of these things are, and here what the percent of that cost is. So you notice that I put the rent amount here, so it's getting the total rent here. You can always add extra rent if it's like a duplex, a triplex, whatever the case is. If you have like a laundry thing or anything that you're kind of getting on the side, I like to put that here in other. But right here, it's going to get the total. So for this, we only have the one rent. It's $1,967. Right here, you see where it says loan 1, principal and interest. So you see that for principal, we're paying $118, and at interest, we're paying $1,000. That's for this loan 1 that we put in right here. And taxes and insurance down here, we have 20% in war chest. War chest, guys, for us, it just means property management and reserves. So we like to put 10% towards property managers, and then we like to put 10% towards reserves. That's just things for like when the AC breaks, the roof breaks, water heater, any repairs that we have to do with the property. We do like having money aside, and typically we like to put 20% for both of those things. So this number right here, you can kind of change, let's say 10%. And you'll notice that this house will actually cash flow if these were the numbers. It would cash flow $301.56 every single month. Now, we do have an HOA here. It is $25, let's just say. So I'm putting that there. And you notice that our actual cash flow is $276. Now, if this was your entire thing, you just wanted to underwrite a house like this really quickly, you can come up here and you will see some stats. And you will see that your cash on cash on this buy and hold is 8.3%. Not too bad. You can also get your depreciation write-off right here. Let's say that the land value for this house is $60,000. You would put that right here. And you'll see that you're able to depreciate $5,000 every single year. Okay. Now, if you wanted to accelerate that, you would just times that number by 7. We haven't put that into the calculator, but that is something that we're looking to add somewhere over here to the right. Okay. And then you can also see your cash flow right here, $276, and any other stats that you kind of want to look at right there. Now, let's say this was a flip. Okay. So we went from a buy and hold to a flip. Here you can see where the fix and flip stuff is right here. And this number right here is how long it's going to take you to flip this property. So right now it's at 0. We're going to go up to 6 months. Okay. And I'm going to click enter, and you're going to notice that all of the numbers kind of changed. Not all of them, but my nets did get lower. So that is taking everything into account. You guys can kind of go one by one. You'll see the ARV, the acquisitions cost, the entry fee, the carry cost, repairs, points, and fees. Now, you do realize that most of these are blue, so please, they're just grabbing that information from some of the stuff that we put here at the beginning. So don't really come and edit these unless you have to, and if you do, just know that you are going to mess up the formula, okay? Contingencies, you can put that here. Resale closing costs, again, we have 5%. If you want to change it, you can just double-click on that and change that percentage, okay? Resale marketing and any other costs that you have there, and it will calculate your net profits. Now, if you want to know your cash on cash on that, you can also come up and, again, see some of the quick stats here. All across the board, your cash on cash on that flip would be 102%, okay? Now, let's go back and say that you couldn't get all of this into one loan. So let's say that these are actually multiple loans. So you were able to raise $100,000 from somebody. You were able to raise $30,000 from somebody else, and you had to get $30,000 from another person. Okay, so if you notice, it doesn't take anything into account until you press the check mark. Okay, and each loan has their own check mark all across the board. So we're going to add these check marks. Okay, and we're going to go up here and say that these are interest only. Okay, so I'm going to change these over to interest only. And as soon as you do that, you'll again notice that we're a zero. We have raised all of the money that we need. And if we come up here, you will realize that it is not giving us any numbers, but that's because our interest rate is at zero. As soon as we put an interest rate amount here, it will calculate it up here. So you will notice that we have loan 1, interest, loan 2, interest, loan 3, interest, and then we can kind of go back and forth between amortized on any of those and interest only on any of those. Okay. And then you will see everything populate up there. So now you have principal and interest, principal and interest, and principal and interest. Now you can also mess with the balloon period. So let's say we have a 5-year balloon on this one. You will notice that we would still owe $94,000. Let's say we have a 5-year balloon on this one and a 5-year balloon on this one. You will notice that all of the numbers change. And again, points and fees and all of those things you would have to take into account. Those things go here, and that will change your bottom line number. So you will have to put those funds into something, either down payment or into one of the loans or anything like that. Now, this is something that we recently added, and these are more for short-term rentals. So let's say that you are buying a 6-bedroom home. So we're only getting one of those units. We're just buying one house, and it typically makes, let's say, $300 a night. And typically it rents at a 70% occupancy. Once you guys do all of those math, it doesn't just have to be one house. Let's say we're also buying a 1-bedroom apartment that makes $100 a night, and that one's 80% occupied. You will notice that down here you get a total of everything that you simply just put up here. So this total is what you're actually going to come and you're going to put up here as your total rental. Okay, and that's how that part gets used. And then you have all of your expenses across here, and you will see your, again, cash flow down there. So I'm going to take this back to the regular loan and show you guys how to use it as a sub 2. Okay, so now I'm going to come and I'm going to uncheck these loans right here just so we can start with what we originally had. Okay, let's say we're still giving the 20% down, and we are still coming with the same closing costs, but in this case, this person had a loan. Okay, let's say that they had a conventional loan of $150,000 at a 3.5% interest for 30 years with 12 payments per year, and they got this loan, let's say, back in 2015. Okay, the year for the sub 2 loan is very important because you will realize that as soon as I check it, it's going to take into account all of those years that I told it that the loan was to give me a balance up here of what they should still owe. And we have noticed that this is very, very, very close to what they actually owe. Okay, you guys will notice if I put 2020, for example, instead of owing $123,000, he would owe $140,000. Okay, so we're going to keep it right there just for the purpose of this video. That is where you're going to get that, and then you still notice that you still have to raise the rest of the money. So I'm going to use, for this purpose, we'll use loan 1. It looks like he owes $19,209.00. So this is more of a hybrid situation, okay? Because our down payment is not covering everything that has to do with the seller finance portion. So if I'm just buying this strictly as a sub 2 deal, I would have to bring my down payment higher. I would have to bring it up to that $59,209.04 is what I believe I see there. And then you notice that it brings it to 0, so we wouldn't have to use this loan here. This is what strictly a sub 2 loan would look like. But in this case, just to do a hybrid for you guys, we're going to go back and say that we're going to do pay this guy $19,209. That's what we have left at a 7.5% for the 30 years and everything else that you guys see here with a 5-year balloon. So as soon as I check that off, you're going to notice that it's 0% or $0 right here that we're missing. And when we go up, you will see his principal and interest on his sub 2 loan. you will see the $19,000 right here as loan 1, and you will see our total down here. And again, so as long as this is cash flowing and this number's at 0, most things should be perfect, okay? And then if you go up here, again, you can see your stats all across the board, and everything else that you need to. So the only thing that's missing on this calculator right now that I haven't shown you guys is a wrap loan, and we are going to get into those right now. All right, guys, wrap loans. Again, this video is not to show you exactly what a wrap is. I am assuming that you know what a wrap is. We are coming here, and again, we purchased the house for $200,000. So let's say that we are going to wrap it for the same exact price that we got it, but we're going to wrap the entire thing at a 7.5%. Now, remember, why does this make sense? We have this loan right here at 7.5%, so we're going to break even on that. But we do have this loan right here at a 3.5%, so we're actually going to make money on that one, okay? So let's assume, again, that we are starting November 1st, and we are giving them a 5-year balloon on this, and then we are clicking check mark on that. So you'll notice that in 5 years, they will still owe us $189,234. And if we want to look at the stats on how are we doing, you will come right here to the right, and you will see that wrap loan principal, they will be paying us $148 towards principal. They would be paying us $1,250 towards interest. And you can put any other loan servicing. For example, we use Westar, which is a loan servicing company. We pay them $15, so we would put that there. And then any other cost that you would have would go there. So right here, you would see that we would actually cash flow on this house $575 every single month if we were to wrap this house, okay? So this right here is how you use a wrap loan, and our wrap loans are also part of our quick stats. You can see right here, wrap cash flow is right there. You will see that right there, which is just the same exact number as your cash flow down here. But again, if you want to look at all your stats at once, that is how you would do it. Before we go through with the rest of the calculator, we're absolutely almost done. I just want to give you guys a huge, huge, huge thank you. This is something that we use internally, and this is something that we are now sharing with you guys just because it has been so valuable to us. So thank you guys for purchasing it, and just know that we are always working on it to make it better. So for those of you that got the lifetime updates, congratulations. You guys will love some of the things that we're working on for the future. Okay, so back to the calculator. Again, if you want to see any of these, how to use them, they will be up here in English and Spanish. Up here is just information in regards to the house. And again, you have that map view, you have the Zillow view. These just take you to the websites. We haven't been able to integrate them to take you like Zillow directly to the house, but we are working on that. Remember, square feet is used for some of the formulas, especially right here, like repairs. And then these stuff right here are just all averaging based off of the price per square foot, okay? Down here, again, we have 3 different things. Just remember that max level offer is what MAO stands for. And then again, just MAO minus 5%, minus 15%. That's how we use it here within our business. Remember, acquisitions cost is how you acquire in the house. And this number down here should equal 0, okay? This means that you have accounted for every single dollar that you are putting up here that this house is going to cost you. And then this right here to the right is just to quickly know the down payment. And then same thing as repairs up there, you can change this. So let's say that you need 3.5%. You can definitely put that number there, and it will tell you, it will show you what that number is and then tell you what the amount is. So you can come and just quickly put that there, okay? Other than that, down here, we have the sub-2 loan that we went over. We have our 3 loans right here in the middle, easily accessible for you guys. Don't forget to check on and off those. Now, I didn't show you guys this, but you'll notice that if I check this one, we have $30,000 in the green. That means that I have raised an extra $30,000. Sometimes that is okay if that is what you are looking to do, okay? Now, technically, if you want to take it into account, what you should really do is just maybe raise your assignment fee. But if you don't want people to see that, or whatever the absolute case is for your specific situation, just know that that's what that means. Okay, so again, your 3 loans there, easily accessible. Right above your 3 loans, anything that has to do with your fix and flip, this right here is what you will be making on that project. Don't forget to change if it's going to be 5 months, 4 months, whatever the case is. At the very top, again, we have the quick stats. Don't forget to take a look at all of your quick stats. And then on the right, you're going to get everything that has to do with your rentals, and if you will be cash flowing on a monthly basis or not, we'll tell you right here. Okay. Right below that will be, again, your short-term rentals, and anything that has to do with that. Again, this is just to kind of get what this total monthly number is right here at that bottom right. And then that number is what you're going to put up here in your monthly income for rents. Okay. And then right below that, you'll have everything that has to do with your wraps, which we just went over. And right below here, I think I will be putting a link, and that link will be so you guys have access to me. If you guys have any questions, you guys can just go ahead and go on there and book an appointment. If you guys have any suggestions or anything that you think will make this calculator better, please, I would love to hear it. And again, this is something that we use in-house every single day. So some of the things that we are missing to show you guys, you will notice that we have written all across the calculator. So to make it easy for everything, we have a couple buttons up here, and they do as they say. So if we reset wraps, you will come down here. It's going to ask you guys to do this the very first time. Just click continue. Right here, click on advance, and then go down here, go to all-in-one spreadsheet. I'm not sure why it really does all of this, but it's just running a script in the back. And you will notice once we come up here and press it again, it'll just go ahead and do it. And it reset everything. Reset everything and took everything back to zero. If we reset the rentals, everything right here will get reset, and it will take it back to zero. Again, everything that it's in white, okay? It didn't do the blues because the blues are loans. They're not part of the rentals. So right next is the loans. You will notice everything here plus everything here, which are again, just formulas. We'll go back to zero. And then you still have the reset wholesale, which is everything that was right here, just disappeared. And then right here, we only have the sub-2 loan left and the address and those things. So we're just going to click on reset all. Now, I just went button by button to show you guys that they all absolutely work. But if we go all the way back to where we were, where we even have the wraps, and we just click on reset all, it will erase the entire spreadsheet and take you absolutely everything back to zero, including the address and everything. So again, I truly hope that you guys enjoy the spreadsheet. It has done absolutely magic for us. And thank you guys for being here.